All right, let's unpack this. Today, we're diving into something pretty audacious, a speculative strategy for the U.S., basically, how it might weaponize the gold market against BRICS.
Yeah, it's a plan laid out in some interesting sources we looked at. A two-phase plan for, well, financial warfare. It draws on history, financial analysis. It's definitely high-stakes stuff.
And you really need to understand the backdrop here, right? The global financial system is shifting.
Definitely shifting.
Yeah.
I'd say it's undergoing a gradual but very deliberate splintering. You have the BRICS nations, and remember that includes new members now like Egypt, Iran, the UAE.
Right.
They're actively trying to reduce reliance on the dollar. It's not subtle.
Especially after the 2022 Russian sanctions really drove that point home.
Exactly. So they're pursuing this very gold-centric strategy, aiming for, more economic independence.
And you can see this BRICS imperative in action. They are systematically buying gold big time. They see it as sanction resistant. They're exploring things like BRICS Pay, their own systems.
And even talking about settling trade using multiple currencies, maybe benchmarked against gold holdings.
The numbers are there too. China's got, over $208 billion in gold. Russia, over $217 billion.
Yeah, and India's moving away from U.S. treasuries too. It's a real shift.
Which, of course, directly challenges the dollar's long-held exorbitant privilege.
It really does. And here's a key stat. Foreign central banks, collectively, now hold more gold than U.S. treasuries.
Wow. First time in decades.
First time in decades. So that really sets the stage for this, radical counter-strategy the sources outline, turning gold itself into the weapon.
Okay, so how would that even work? Phase one is described as a kind of honey trap.
Exactly, a honey trap. The idea is to deliberately manufacture a huge surge in the price of gold, get it rallying hard, make it look like the ultimate safe haven.
To encourage the BRICS nations to buy even more, to overextend themselves.
Precisely, lure them deeper in. And it starts with this thing called the accountancy gambit. So the U.S. officially values its gold, all 8,133 tons of it, at this old price, like $42.22 an ounce.
Right, a historical artifact.
Totally. So the gambit is
The
revalue it. Revalue it to the current market price, say over $3,500 an ounce.
Huh.
Instantly, that creates this enormous paper gain, maybe over $1.5 trillion.
Shades of FDR and the 1934 Gold Reserve Act.
Kind of, yeah. But the clever part here isn't just the accounting trick. It's psychological. It basically says, see, gold is super important, validating the BRICS narrative.
While setting them up. Sneaky.
Very. And it wouldn't just be that one move.
Right, the sources mention other things, like monetary policy.
Yeah, permissive policy, lower interest rates, maybe tolerating higher inflation for a bit, even using things like tariffs to create uncertainty, which often boost gold.
Plus, maybe some strategic buying in the paper gold markets to fuel the fire.
All designed to make this gold rally look unstoppable. Get BRICS to double down.
Okay, so the trap is set, BRICS is loaded up on expensive gold, then what? How do you spring the trap?
Phase 2. Engineering the fall. This is where the paper tiger blitz comes in.
Paper tie, yeah.
A massive, coordinated short-selling attack on the paper gold markets, like COMEX. The sources even mentioned potentially using naked shorts, selling gold futures you don't actually have.
Which is possible because the paper market is so much bigger than the physical market.
Hugely bigger. That disconnect is the vulnerability they'd exploit to just hammer the price down.
And what about actual physical selling?
That's the next part. A coordinated central bank blitzes. Think London Gold Pool 2.0.
Ah, the 1960s effort to cap the gold price.
Exactly. Allied central banks would step in and strategically sell parts of their own gold reserves. Maybe quietly, through channels like the Bank for International Settlement, the BIS, to absorb any buying pressure trying to counter the short selling.
So, paper attack, physical supply increase, anything else?
Oh, yes. A sharp reversal in policy. The Fed suddenly goes hawkish, jacks up interest rates, strengthens the dollar, and maybe the U.S. administration works to de-escalate global tensions, reducing that fear premium gold often enjoys.
Wow. A multi-pronged assault designed to just crush the gold price.
That seems to be the idea outlined. A swift, brutal collapse.
So what are the risks? I mean, this sounds incredibly dangerous.
Oh, well, the risks are huge. The sources are clear on that. You're talking potential financial contagion spreading everywhere, massive reputational damage for the U.S. How could anyone trust U.S. markets or the dollar after something like that?
It could permanently erode confidence, couldn't it?
Absolutely. Which leads to this really fascinating paradox.
Go on.
Well, if this strategy ever got out or was even strongly suspected, wouldn't it just accelerate de-dollarization? By showing how vulnerable paper assets and derivatives are to manipulation, The U.S. would essentially be proving the BRICS' original point for them.
Huh. So they'd win the battle but lose the war.
Potentially. A tactical victory in the gold market could lead to a massive strategic defeat for dollar dominance. It might just harden everyone's resolve to build that alternative system based on physical assets, precisely because they've seen how financial weapons can be used.
So, could manipulating gold actually end up being the catalyst for the very multipolar financial world it was trying to prevent? Something for you, the listener, to definitely mull over.